Hello, very good morning to all. I'm Kelvin here again. Welcome to today's Daily Dose of Market Insights. Today will be the Tuesday, the 21st of January 2025. So as usual, before we start our Daily Dose of Market Insights, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, before we start, let's have a quick look at in terms of the intraday performance yesterday. Very interesting. We see two-way volatility across the board in majority of the broad-based across asset classes, and thereafter I will share with you what are the key technical levels to look out for our intraday technical outlook for today. So we know that yesterday was a very important day where incoming US President Trump got sworn in as officially as the US President. So what's initially interesting over here is that in his particular speech yesterday, he actually hold off mentioning about immediate trade tariffs being implemented on US major trading partners, especially on China, and that causes the dollar strength to actually be subsided and the dollar soar off across the board. But however, in today's Asia session, that means yesterday's night US session, that means we talk about 9 p.m. US time, Trump in his Oval Office, means officially he's in the White House, he started to issue a slew of executive orders. And while issuing a slew of executive orders, he did actually give a kind of a remark, kind of a off-the-press remark, stating that he plans to enact 25% tariffs on Mexico and Canada by February the 1st, or 1st of February, I would say. Nothing is mentioned about China yet, but given this sudden change in tonality, that means what this is a usual way of Trump implementation policy. That means there's this element of surprise in policy implementation, despite the fact that in his what I call inauguration speech, he kind of be more toned down on trade tariffs. But however, within less than 24 hours, he starts to change his tonality and be hawkish on trade tariffs. Given a kind of a off the press conference while signing up executive orders that he has plans of enacting 25% tariffs on Mexico and Canada by 1st of February. And what happened over here, that caused the dollar to actually spike up as Canada and also spike up against the other major currency as well, the sterling, the euro as well. But still is weak against the dollar yen. So we know that the dollar yen has been kind of come break above set resistance of 158.30, 158.80 because of this incoming Friday BOJ monetary policy meeting that is live right now, where based on the overnight swaps markets expecting BOJ to actually implement a 25 basis point hike to bring the Japan short-term policy rate to 0.5%. So that also potentially see the dollar being muted against the yen yesterday as well, and also in today's Asia session, despite the fact that the dollar has started to strengthen in a fair bit among the dollar CAD, the dollar euro, and the dollar sterling over here. All right, and what interesting over here, what you see over here is that in today's Asia session as well, some of the Asia we call it stock indices starting to waver despite yesterday gain. So what we see is the Hang Seng Index is only up marginally at 0.4%, and the China CSI 300 is actually down by 0.2%. And if you look at other Asia markets, like Kospi is almost unchanged over here. We have the Singapore STI, which is very kind of a proxy of international trade, is actually down negative 0.6%. So that's also indicating a bit of what I call two-way volatility that's being seen in today's Asia stock market due to the fact of this element of surprise that Trump gave to the market by suddenly changing for a much more measured tone in terms of trade tariffs to outright what I call hawkish tonality, where he actually plans to actually implement 25% tariffs on Mexico and Canada by the 1st of February. All right, so that's the kind of a key news flow that is taking shape right now, given the fact that, and also yesterday he do mention about American policy, stating that he wanted to be US to be one of the, okay, give me a minute, I think it's somewhere around here. Okay, it's a slew of message. So one of the message he mentioned over here is that he wanted US to be a major oil supplier again. So that also causes the West Texas crude oil to actually plummet, but that hit our support level at around this 76.80, 76.70 level. So later I'll touch on more about the short-term technical outlook on the West Texas crude oil, because right now it's showing signs of a bullish reversal, at least in on the hourly time frame chart over here. All right. So now with that, now let us now straight away jump straight into the intraday technical outlook on the broad-based cross asset classes. All right, starting with the FX market first. All right. So let me expand my screen so that you guys could see. All right, so starting with the FX market over here, which is the euro dollar. So the euro dollar, what you could see is that yes, it actually broke above our this short-term pivotal resistance level that we have at this 1.0340, 1.0350 level, hit the second alternative resistance, which is the 50-day moving average, and starts to have a bearish reaction of it in today's Asia session. So this sell-off in the euro dollar is caused by that sudden change in Trump's we call it rhetoric towards trade tariffs. Initially, at his speech was very mild, but however, after his speech, while he stepped into his office, he starts to actually rattle out rather hawkish trade rhetorics, stating that he may impose 25% outright tariffs on Canada and Mexico. But so far, market is now keeping a close eyes or ears, especially on China, because he didn't mention anything yet about China. But market has really starts to be a bit jittery by selling off the euro, by pushing it down, and almost initially this was the spike up. All right, so after that, it actually came down and almost erased 3/4 of yesterday's inauguration speech gate. So net overall, I'll be using this 1.0440 slash 1.0460 as my short-term pivotal resistance level for today. And also what we could see now is there's a bearish divergence that has taken shape on the hourly RSI as well over here. So where you could see a lower high, while the price action shows higher high yesterday on the euro dollar as it tested the 1.0440 slash 1.0460, which is which is the 50-day moving average, and this bunch of graphical resistance over here, the minor swing high of 20th of December, minor swing high of 30th of December, 6th of January, and 7th of January. So first support level to watch in order the bears to actually have a better foothold is got to break below the 1.0330 pretty fast during the European session. That also correspond to that 20-day moving average that was taken out yesterday as well. So if we have to have an hourly close during the European session at 1.0330, then potentially the intraday bears may gain a better foothold to potentially expose the next near-term support level at 1.24T. Only an hourly close above 1.0460 may invalidate today's intraday bearish bias to see a further squeeze up of this extension of this mean reversion rebound scenario. For the next intermediate resistance to come in at 1.0520, which is the minor swing high area of 13th of December and 17th December. Above it, potentially sees the medium-term pivotal resistance at 1.06 level. So that's for the euro dollar. Now, turning our attention will be the sterling dollar. So the sterling dollar actually hit our short-term pivotal resistance level, a tightened one at 1.2324 before sliding back down again over here. So before the start of the inauguration speech, the sterling also hit our first support, come break below it, and managed to rally up from here. So I'll be using a slightly higher level today, given the kind of the way Trump's expressed himself in terms of policy implementation. I don't want to use the 1.2325 level as my short-term pivotal resistance, despite it's being challenged and bearish reaction of it in today's Asia session. I'll be using 1.2375 / 1.2405 as my short-term pivotal resistance for today. We also correspond to the 20-day moving average. So with that, still maintaining that intraday bearish bias on the sterling dollar. First support level to watch during the European session will remains unchanged at 1.2160. Only a breakdown below 1.2160 allows the bears to gain a better foothold to expose the next near-term support level at 1.2080. However, if we have an hourly close above 1.2405, that would invalidate today's intraday bearish bias to see a further squeeze up to revisit 1.2480. So what is 1.2480 is in fact the upper limit of this medium-term descending channel that is in place since the high of 27th of September. Further up, 2480 will start to see the 50-day moving average coming in as a resistance level as well at 1.2570, which confluence with the minor swing high of 31st of December and 7th of January. So net overall, using a slightly short-term pivotal resistance zone, 1.2375, 1.2405 for the sterling dollar to maintain the intraday bearish bias, but the bears got to break fast below the 1.2160 level in order to gain a better foothold on the sterling dollar. Now, turning our attention will be the Asia Pacific currency against the dollar, starting with the Aussie dollar. So what we see the Aussie dollar over here is it did manage to break out above the 20-day moving average and also the upper limit of this former medium-term descending channel that was in place since 1st of October high last year. So far, the RSI still remains positive as it managed to actually bounce off the parallel support level, okay, at above the 50 level mark as well. Okay, so what we could see is there's some form of medium short-term upside momentum coming back into the Aussie dollar. So what I will do is that I'll be using this short-term pivotal support at 61.65 with the first support coming in at 62 figure level. So as long as 61.65 short-term pivotal support holds, potentially this mean reversion rebound may extend above 62.10, sees the next resistance coming, next near-term resistance or intermediate resistance coming in at 63.60, which confluence with the 50-day moving average, and as well as this minor congestion area from 13th of December to 17th of December. Only a breakdown below 61.65, but hourly close below it invalidate today's intraday mean reversion rebound scenario, which is the bullish bias that we have for today. Then that would reinstate the bearish pressure to expose the next support level at 61.20. Below it sees 60.55 / 60.30. So net in a nutshell, we'll be flipping to a intraday bullish bias for today for the Aussie dollar in response for a potential mean reversion rebound, given the technical elements on the intraday basis has started to turn bullish for now. Right, using 61.60 as my short-term pivotal resistance. But however, once it reach close to the 63.60 level, do pay close attention to any form of bullish reversal candlestick, because at 63.60 potentially that level could potentially reinsert the bears coming into the picture again on Aussie dollar. So with that, let us now take a look at the dollar yen. So dollar yen plummeted as expected after one time, two time, three time test at the 150.60.30 short-term pivotal resistance level. So now breaking below the 155.10 level already, which is very close to the 50-day moving average, coming close to it. So with that, I do not want to tighten my short-term pivotal support to be so tight, given that the volatility of Trump's induced, we call it speeches that may start to actually take hold in today's US session again, or even during the European session. So first resistance level to watch will be 155.55. Potentially there may be some form of bounce coming into play after a test at 154.15. Given the fact that it's coming very close to the oversold level for the hourly RSI. But however, as long as this minor bounce that may take shape at this 154.15 level didn't surpass above 156.30 for today, short-term pivotal resistance remains the same. We'll still maintain that intraday bearish bias on the dollar yen below 154.15 level. potentially exposes 15320, which correspond to the minor swing low area of 18th of December, and the potentially the 20-day 200-day moving average that is coming very close to it as well. So the rationale, I don't want to tighten it to be so tight at 155.55. Short-term pivotal resistance for I don't want to use 155.55 as my short-term pivotal resistance for today, because of the nature of the increased volatility that may be caused by Trump's this kind of policy surprise element in the way he implements his policy, and also technically the hourly RSI is coming very close to the oversold region already. There could be some form of bounce taking shape at the 154.15 level, and this bounce may potentially revisit 155.55 and slightly above it. But as long as the bounce didn't surpass 156.30 that got rejected 3 times yesterday, we will still maintain the intraday bearish bias on the dollar yen. After 154.15 exposes 153.20, only an hourly close above 156.30 invalidate today's intraday bearish bias to see a squeeze up to to revisit the 20-day moving average that is acting as the next intermediate resistance at 157.15. A breakout above it revisit this key medium-term pivotal resistance zone at 158.35/158.30. So that's for the dollar yen, still maintaining that intraday bearish bias using 156.30 as my short-term pivotal resistance level. So with that, that sum up the intraday technical outlook on the FX market. So on the FX market, what we could see over here is that on the intraday basis, it's a bit mixed. A bit of dollar strength still prevalent on the euro and the sterling, but however, the dollar weakness can be seen on the Aussie on the intraday basis only, and the dollar remains weak against the yen, more likely due to internal localized Japanese situation, where market is now expecting BOJ to start to normalize or revisit this chance of a potential interest rate hike in Japan this coming Friday, which is the conclusion of the Bank of Japan monetary policy meeting. All right, so with that, let us now focus our attention to the major stock indices, starting with the Hang Seng. So if you look at Hang Seng over here, is that yesterday we do have a bullish bias. So this bullish bias is coming very close to the resistance level at 20,520 over here, 20,520. So with that, we may start to see a bit of bounces here and there. So since it's coming very close to 20,520, and if you look at the FIBO extension taken from the low of this ongoing, we call it 1 week plus of rebound, it's also the one time FIBO extension that was made yesterday. All right, and given that the hourly RSI has started to trace out a series of bearish divergence, as you could see here, price action doing lower high, whereas we see a higher high on the raw price action of the Hong Kong 33, i.e. representing the Hang Seng index. So with that, that means i.e. There could be a chance that we may start to see kind of a minor pullback taking shape going forward. So using the 20,520 as my short-term pivotal resistance level, that level is not surpassed, potentially the Hong Kong 33 may shape a bearish setback or corrective pullback. So we'll flip to a intraday bearish bias for today. First support level to watch will be close to the lower boundary of this minor ascending channel, acting as a support close to the support level at 19,790. A breakdown below it sees 19,580, which is the 20-day moving average, acting as a support level as well. So however, if price action starts to squeeze up and very strongly and have an hourly close above 20,520, then this intraday, we call it minor setback scenario or bearish bias minor setback scenario, will be invalidated to continue the bullish pressure to expose the next near-term resistance at 20,840 next. All right, so that's for the Hong Kong 33. Now, turning our attention will be the Japan 225. So the Japan 225 yesterday squeezed up and hit our first resistance, which is at 39,180, which is also close to the 20-day moving average, acting as a resistance before tumbling down again, can't break below the 200-day moving average and traded back up. So given this kind of mixed element, I will flip to a neutrality stance for today on the Japan 225, i.e. the Nikkei 225. So neutral between 39,180 and 38,490 for the Japan 225 at this juncture. Only push up above 39,180 may see the continuation of the intraday bullish bias within this complex sideways range configuration that is still in place since late September last year to allow it to float up to the upper limit of this sideways range. In first step, the next resistance to watch after 39,180 is 39,460/39,600 next. So that's for the Japan 225. Flipping to a neutrality stance for today at between 39,180 and 38,490 next. Now, last, turning our attention, next will be the German DAX, which is the German 30. So the German 30 yesterday continues to rally and hit the resistance level, almost hit the second resistance level at 21,110. So this 21,110 will be my short-term pivotal resistance for today. All right. And what we could see now on the hourly RSI, it starts to shape that bearish divergence as well. Okay, from that, so there is actually a risk that it may now start to do a minor corrective setback or pullback scenario after this rally that has taken shape in close to about a week and a half or so. So with that, we'll be flipping to a intraday bearish bias using 21,110 as my short-term pivotal resistance level. As long as this level is not surpassed the upside, potentially there could be a put it away that a minor corrective setback scenario that could unfold, exposing the next support level to watch out for today. In first step will be at 20,720. So what's 20,720? Very important is the dotted green line here. This dotted green line is the former major ascending channel resistance that has been taken out, now turns into a pullback support. If this level couldn't hold, potentially we may expose 20,610. So what's 20,610 is the minor swing low area of 16th of Jan. If we do the Fibo retracement of this ongoing 1.5 week of rally, is close to the 50% Fibo retracement as well. Only an hourly close and a breakout above the 21,110 short-term pivotal resistance will invalidate today's bearish bias for that minor corrective setback scenario to be not unfold, and we will see the continuation of the impulsive up move for the German 30, exposing the next resistance level at 21,240, followed by another Fibo extension cluster level at 21,390/21,440 next. So that's for the German 30. Given the hourly RSI shaping that bearish divergence at the overbought level yesterday, there could be a chance that the German 30 may do a potential minor corrective setback scenario for today before resuming its potential impulsive up move sequence using 21,110 as my short-term pivotal resistance for today in order for that potential minor corrective setback scenario to unfold. So that's for the German 30. Turning our attention now will be the US Wall Street 30. So what you could see, the US Wall Street 30 yesterday we turned into a neutrality stance, and what we could see now is that the technical configuration on the hourly RSI has starts to be more bearish than bullish, because right now during the Asia session it broke down below a ascending channel, broke down below a parallel of support level. But you could see over here it breaks down, and prior breaking down it starts to shape a bearish divergence as well on the US Wall Street 30. All right, so with that I'll be using 43,730/43,820 as my short-term pivotal resistance level. We will flip to a intraday bearish bias for today. Two near-term support level to watch will be 43,095. A breakdown below it exposes 42,660. Only a recovery and a push up and the hourly close above 43,820 will invalidate today's short-term pivotal resistance level to see the continuation of the recovery towards the next near-term resistance level at 44,195. Above it, potentially sees 44,530/44,745 next. So that's for the US Wall Street 30. Flipping to a intraday bearish bias because of the momentum weakness that's being displayed by the hourly RSI using 43,820 as my short-term, 43,730, 43,820 as my short-term pivotal resistance level. So now with the Nasdaq 100, Nasdaq 100 over here. So this Nasdaq 100 as well, what we could see is that the hourly RSI also starts to actually kind of break down below the so then now it's trying to recapture back again. So the bit of whipsaw over here. But what we could see is that it starts to flash out this bearish divergence as well. Okay, so with that, I'll be using this 21,720, which is a 0.764 Fibo extension from the low of 13th of December and correspond to this graphical resistance zone of 26th of December. Got rejected on the 7th of Jan before selling off again. So as long as using 21,730 as my short-term pivotal resistance level, we will flip to a intraday bearish bias on the Nasdaq 100. First support level to watch for today will be 21,240. Only a breakdown below 21,240 exposes the next near-term support level at 20,990. However, if we start to see an hourly close above 21,730, then this recovery will potentially extend towards 21,920. Above it sees the current all-time high area at 21,130, 22,130 slash 22,160. So with that, we will use 21,730 short-term pivotal resistance and flip to a intraday bearish bias on the Nasdaq 100 for today. All right, so that sum up the intraday technical outlook on this broad-based major stock indices. So now let us now focus our attention back to the commodities market, starting with gold XAU/USD. So for gold XAU/USD, it's now managed to again squeeze up and float up and test the upper limit of this pivotal resistance zone at 21,000 716 20 27 2716 2728. All right, so what's this level? Why is it so important? Because it's actually very clearly it got rejected one time, two time, and potentially it still kind of evolved in this kind of where since the low of 14th of November, it kind of being involved in this kind of minor ascending triangle range configuration, as long as this 2128 upper limit is not being surpassed to the upside. All right, so with that, there's some kind of rejection being taking place, because as we are speaking right now, the candlestick has starts to potentially form a hourly doji candlestick. So with that, still using the 2117 upper limit, 2728 level as my medium-term pivotal resistance level to watch. So first support level to watch out for today remains unchanged at 2728, which is the minor swing low area of yesterday, and as well as the lower limit of this minor ascending channel that is in place since 31st of December last year. So as long as 2728 upper limit of this medium-term pivotal resistance zone holds, we will still maintain that intraday bearish bias within this minor ascending channel range configuration. Only a breakdown below 2688 level for today. Intraday basis, the bears may gain a better footing to revisit the next support level at 2,670/2650, which correspond to the 20-day and the 50-day moving average. However, if we start to see an hourly close above 2728 medium-term pivotal resistance level, then this recovery potentially may extend, and it may start to see a bullish breakout scenario as well, exposing the next near-term resistance level in first step, 2748, followed by 2722, which is the minor congestion area of 31st of October. So that's for gold XAU/USD. Now, lastly will be the West Texas crude oil. So for West Texas crude oil, you recall yesterday we do have a bearish bias with a very tight short-term pivotal resistance at 79.80 or so. Price action float down and hit the 76.80 level mark, which is very close to the pullback support level of this dotted line. So this dotted gray line, if you look at the daily time frame chart, is in fact the former major descending triangle range resistance from the high of 28th of September 2023 that was taken out earlier on last 13th of last week, 13th of January, and it hit of 80.30 before pulling back. And yesterday it managed to find support at this pullback line as well. The former major descending triangle range resistance now turns into a pullback support at that 76.70 level. So for today, I'll be using 76.70 as my short-term pivotal support level. So yesterday's sell-off was actually due to the fact that of Trump's we call it inauguration speech that he wanted to make US as a major oil supplier again. But however, the bulls managed to find some bids coming into the West Texas crude oil, which I got to respect it, because it managed to hold at the 76.70 pullback support, which is our today's short-term pivotal support, and as well as the hourly RSI has started to shape a bullish breakout as well from this former descending trend line resistance. So with that, 76.70 short-term pivotal support level for today for West Texas Oil, flip back to a bullish bias on the intraday basis. First resistance to watch will be 78.90. Above it, potentially revisit 80.90 next. All right, so only hourly close and a push down below 76.70 will invalidate today's intraday bullish bias to see the extension of this corrective decline scenario, exposing the 200-day moving average at 75.47, pardon me. Below it sees 74.40 next, which correspond to the rising 20-day moving average as well. So net overall, I'll be using 76.70 as my short-term pivotal support level for West Texas Oil, and we'll flip back to a intraday bullish bias for today for West Texas Oil. So that sum up the intraday technical outlook on the broad-based cross asset classes. So before we go, let's take a look at the economic calendar for the key economic data to look out for today. Other than the what I call it, the all eyes and ears on potential Trump's executive orders that is being signed off on the second day, on the official second day being in the White House. All right, so for today, what we could see over here is that key data will come in during the European session at 3 p.m., which is the labor tier 1 labor data in UK, which is the unemployment rate and the unemployment change that could potentially impact the sterling dollar, because market is expecting a very weak employment change number. Consensus is only looking at, for the month of November, only 35k jobs added, way below from the previous month of October, which is flash out 173k job added. But the unemployment rate remains steady. Market is expecting to remain steady at 4.3%. And thereafter, you see the 6 p.m. the Eurozone ZEW economic sentiment index. So that's more like a business consumer confidence index over here. So market is expecting a slight downtick to 16.9 from 17 that was printed in the month of December. In the month of December. Then thereafter, potentially for those who are interested in the Canada dollar or the dollar CAD or the Canada crosses, Canada inflation rate will be out at 9:30 p.m. All right, over here. So that's potentially sum up today's key data. And for those who are looking at the Kiwi dollar, way early tomorrow morning Singapore time at 5:45 a.m. 5:45 a.m. We'll see the release of Q4 inflation rate for New Zealand. All right, so for New Zealand, it's a bit we call it unusual. For the rest of the other countries, inflation data don't release on a monthly basis, they rather release on a quarterly basis. And also today we also start to see an important earnings from US over here. So we know that we are still on the we call it the onset of this second week of this Q4 earnings seasons. All right, so for today, after the close of the US session, that means we're talking about after 5 a.m. Singapore time, Netflix will report its earnings. Market is expecting a rather rosy earnings per share, 4.2% EPS, way above the previous quarter or Q3 of 2.11. So something to look out for that could potentially trigger a feedback loop effect on the Nasdaq 100 during tomorrow early Asia session. All right, so with that, that sum up today's Daily Dose of Market Insights. I'm Kelvin here signing off, and I wish you all a great day ahead, and we shall speak again tomorrow. Thank you very much.